Okay, here we go. I wasn't sure. So I will take over right now. Oh, okay. I thought you were just passing it back to me.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 5th day of June, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Today we're going to turn things around. Michael's going to come on first. He'll give us a recap of what happened in the live training room, do some live trading on the TradingView platform, and when he's finished, I'll take over and we'll do the regular show as we normally do from start to finish. Michael, it's all yours.
All right, I will take it over here right now.
Right now.
All right, got it. Coming over. And there you go. Should be looking at my stuff. I believe you are. All right. Great. Fine stuff. All right. We'll start right here. All right. So good afternoon, everyone. Today is Thursday, the 5th day of June, 2025. Now, if you have not taken a trial with us and you want to take a trial with us, the trial is free. It's for 5 days, 5 glorious days. I know it says 9:15, but I like to open the room up at 9:15, but I don't actually start talking until 9:27. And between 9:27 and 9:30, that is an important time, as I will show you here. 9:27 to 9:30 is a very important time, as I will show you here. So it's best if you get in there you get in there a little before 9:27, but be ready to trade at 9:27. Anyway, click on that. There's no credit card required for the trial. All right, when you click on that, it's going to bring you to this registration page. Just fill out this form. Once you fill out this form, you'll be sent a link to get into the next set. I'm sorry. Once you fill out this form, down here at the bottom, make sure you give us your TradingView login ID. All right. Click on this to get one. If you don't have one, click on this link right here to get a TradingView login ID. You got to give us that login ID, your username, or whatever it is. Give it to us so we can enable the indicators for you. All right. Once you do that, then we know that you took the trial, so we can be of much greater assistance in getting you trading. All right. All right. Now I have 2 of these open, and I don't know why. All right. I do know why. All right. So today, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, we're up 204 ticks on the NQ, 20 ticks on the Russell, 42 on gold, and we're minus 14 on the ES. That put us at $1,365 a contract this morning. Today, it took 2 minutes and 1 trade. Okay, again, I was saying be ready to trade at 9:27. So far, every day this week, we have gotten the goal for the day in those 3 minutes between 9:27 and 9:30. 1 trade each day, goal for the day. You could be done in 3 minutes between 9:27 and 9:30 every day this week. You could have been done. We haven't worked a full 10 minutes yet this week getting the goal for the day. And doing that, we're actually up $4,250. with 6 contracts. I'm sorry, with 10 contracts, we're up $4,250. With 6 contracts, we were up $2,550 in the 4 days this week in less than 10 minutes. So anyway, I stepped ahead a little bit. This is where we are today, right? 6/5/2025. We're up 204 ticks on the NQ. What? Let's just say that. 20 ticks on the Russell, 42 ticks on the gold, and minus 14 on the ES. Puts us at plus $1,365 on the morning session. Today, it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,000, and we took a total of 29 trades this morning. So on the month now, we're up $3,977. That is with 1 contract for the whole morning session. Over 4 business days, averaging $994 per contract per 2-hour business day. On the year, we are now at $129,570. That is over 95 business days, averaging $1,363. Okay, yeah, something's off here. Michael, are you in here right now? You are in here. This number should be 10 times that number. I'm thinking. Something's off. I don't know which one is off, but something is off. Anyway, over 95 business days, we're averaging $1,363 per contract on the morning session. Following the 24/20 blueprint so far this year, if you quit trading when you got the goal for the day and you added 1 contract per month, so far we're still under 12 hours to beat. You would have had to work only about 12 hours. You'd be up $48,072 for those 12 hours, averaging $4,017 per hour. Okay, $4,017 per hour in that time. Thank you. All right, so that was all of that. Now we took 29 trades, and today most of the trades are on gold. It seems like gold has been the thing we trade the most lately. So let's start out with the NQ. Okay, we had a fair number of trades on the NQ. We'll just go right to left instead of left to right today. Right? God, did we not stop out on the NQ today? It's not. All right, so our first trade on the NQ, we picked up 20 ticks. Then the next trade, over here, we picked up 32 to get us to 52. Then the trade after that, we picked up 28 or something like that. I don't know, but we got up to 84, from 52 to 84. I guess that would be 30, no, another 32, another 32. Okay, and then we went from 84 up to 88, so we picked up 4 ticks. Then we went from 88 to 112, then 112 to 128, and then 128 to 204. And that is where we ended with the NQ for the morning session. Since the close of the morning session, there was not much happening here on the NQ. Right, not much at all going on in there. There was 1 trade right here that you could have gotten if you stuck it out for the whole trade. If you stuck it out for the whole trade, it would have worked out for you. Okay. The next one was right here. Again, if you stuck it out for the whole trade, you would have made some nice profit. The next one was right here. This wasn't that bad though. This one you were up and down a lot, back and forth, close to stop it out, and then eventually went to profit. That was the same thing for this one over here, this one back here that I did. It was back and forth forever. There was another one that I did like that too, it seemed like. But this was a good trade, this was a good trade, and then finally right over here, this was not. This would have stopped you out right here. That final one would have stopped you out. But on the NQ, we ended up with 204 ticks. 204. We'll go to the ES now. On the ES, we were negative on the day, and we'll go back here. We started out positive, I believe. On the ES, we actually didn't start out positive. We started out negative. Okay, over here, we stopped out on our very first trade on the ES. And that was everything good. Everything was good about that trade. We just stopped out. And then the next one here, we ended up with a break even. So we went from minus 10. Here we got 6 ticks. We went to minus 4. Then we stopped out again. We went down to minus 14. We didn't place another trade, did we? Oh, we got one more break even right in there. There were some things that were happening in here. We didn't really have any news after the morning. I mean, after the pre-market news, we really didn't have any news. But I guess Trump was talking with Xi. Had some long-awaited phone call with Xi Ping or whatever. And that's what made the market to move a little bit. I don't know how anybody would know what was happening with the phone call, but whatever. So this thing that we drew in here yesterday, you see, we got up to it again today. We got up to it overnight in the pre-market, and we got back up to it just now. This was the swing high that we had been looking at 6,008. It actually got all the way up to 6,016 over the morning session in the pre-market. But it came back down. It's fighting this level right now. Now this level could act as support at this point. And when it came back down from it from the top, but now it's going, went right through it, and now it's going back up, and it's acting a little bit like resistance now. It could turn into something that's going to be tough to get off of, but I think tomorrow morning's news is either going to send us flying up or crashing down. I think we're going to go up. But it could be pricing everything in right now as well. So you just trade what's in front of you. That's what I always do. On the Russell. Now, on this Russell, we are, let's go all the way back here. All of the way back here. Here we go. So right here on the Russell, our first trade on the Russell was a break even. The next trade we picked up 5 ticks. That got us to 5, and another 5 got us to 15. Then we had a break even. We had one more trade in there where we got 10 ticks toward the end of it. I remember we got the 10 ticks, but I don't remember exactly. Was it this one we got the 10 ticks on? I think we got 10 ticks on this one. There was another one in here that we got 5 ticks because we went from 5 to 10 to 20. And this one right here, we got 10 ticks on that. I remember that being the one because Jessica got like 74 ticks on that, I think. And then we get into the break, and during the break, again, it didn't have a whole bunch of movement. It had a lot of sideways stuff right here. If you took this long trade right here, which wouldn't have been too bad of a place to take a trade, it went up, it pulled back. It didn't really give you a good spot to trade off of right here. A little deeper, like right in here, would have been 50%. This would have been a good spot. I would have done an aggressive trade right there. Let me draw it for you. Right here where it came, dropped into the oversold right there. I would have bought that aggressively right there, that green bar. I would have bought that aggressively right there. Right, and that didn't make it into the overbought until here. It came all the way back down and got into the oversold again. I probably would have bought it again aggressively right here on this next one. Right, you would have been looking at this right here. And now that I think about it, I probably wouldn't have done anything with that. If I did anything, it would have been a long trade, but I don't think it was too crunched up. I would have let that go. And then you have this over here that I would have done. Maybe we got to draw the. No, I don't think I would have done that either because it would have been not far enough down. Yeah, I wouldn't have done that either. So I would have had one aggressive trade that would have given us some profit during that break. And that is it. Right. Now the Russell. Did we already do the Russell? Yeah, we did the Russell. So I did the Russell. I did the ES. I did the NQ. So gold is the only thing I haven't done, right? Okay, I'll go check that out, Michael. Thank you. Thank you for helping me with that. All right, so now we're going to jump over to the gold. That's one we haven't done yet. And that's where we had most of our trades this morning again. Wow, there was a lot of movement here during the break on gold. All those ones had just a little tiny bit of movement. And look at all this movement that gold had during the break. They had a whole page worth of when I crunch it up. And the other ones, even when I spread it out, the other ones had like this much movement. Wow, gold is really volatile. I don't know what the margins are on gold right now. Are we at full margins on gold? Does anybody know? All right, so right here. Our first trade on gold, we picked up 16 ticks right there, the break even, and then I stopped out. I put us down to 1. And then I got 12 over here. It goes up to 13. Break even, break even. Break even. Then finally got 1 tick there. That got us to 14. Then 10 ticks over here got us to 24. And 3 got us to 27. Then another break even. And from 27 we went to 52. So I had a really good trade on that one to 52. then a break even. No, we're missing a trade in here. I thought this right here is where I think we had the 25 ticks. I think that was a really good trade. So we're missing a trade here somewhere. We went from 24 to 27 to 52 to 57, and then we had to stop out. So right here, we went to 57. So we had a 3-tick gain there, then a break even, and then we stopped out. That was the last trade I did on gold in the morning. And that brought us down to 42. All right, from there, we ended the room in the morning, and it pulled back to here. And it came right back down to here, giving you this right here. This wouldn't have been a bad place to take a trade, I don't think, because you would have been going from this one right here. That would have been the midpoint of that. Pull back, give you this right here. That wouldn't have been a bad place to take a trade, right? If you draw it like this, that would have been an okay place to take a trade right in there, okay? And then it spun all the way down like this. So in here, it's kind of tough because the leg length is going to be so small all the way through here. The leg length is going to be these little tiny legs, right? So it's kind of tough. I might not have wanted to trade that at all. Going back and looking at it on a different time frame even. The first one would have been right here where it came out of the overbought. And that would have been 50% retracement of that leg length. Made a little leg length down right here. Then the next one would have been all the way over here. Okay, so that's not too bad. We would have gone from here to here. Looking for a pullback up into here. So I wouldn't have taken any trade in there. And then you would have gone from here, where it came out of the overbought, to there, where it went back into the overbought. So this would have been a good place to take a trade right here. That would have been an aggressive trade right there on the up close of this green bar right there. You see that? That would have been a place for an aggressive trade. All right. And then the next one was right here. Okay. That could have been an aggressive trade there too. Possibly right there. And then the next one was from here down to here. That didn't give you a trade at the 50%. It gave you a trade at 100%. Even more than 100% because it would have been from right here. So I might have taken that on the down close right here. Okay, on this down close right here. I might have taken that trade on that down close, right? And then that puts it like this over here. Okay, so again, 100% retracement right there. Another down close right there. Okay, and then you guys follow me with this? So then the next one would have been from here to here. This is a 50% retracement, so that would have been a good trade. So you would have had 200% retracements in a row, then a 50% retracement on this one. If you bring it over here like that, 50% retracement right there, and drop it down to here, and you would have had a 50% retracement right here. That would have, it looks like it might have stopped you out to the tick, right? But then it went down again, and you would have done this from here down to here now, right? So that's not a 50%. Actually, this was a 50% right here, where it went into the overbought and it closed right there at the midpoint. I would have shorted that and I would have gotten stopped out right there. Probably to the tick. Depends where I entered. If I ended up getting a fill up here, then I would have stayed in it. But if I got filled right here, that looks like it would have stopped me out to the tick. I would have had a 15 tick stop on that. So if I filled here right at the midpoint, 75.4, 76.9 is as high as it could go. 76.9 is exactly where it went. If I filled a little above that, then I'd have stayed in it. If I'd have filled right at that, then I'd have stopped out to the tick. Right. The next one goes down to here like that. And that would have been another aggressive trade right there at the midpoint again. That would have stopped me out for sure. If I was aggressive on that and not conservative, I would have stopped out for sure on that. I don't know that I'd still be trading all this stuff though. This one right here, you would have had to wait for, nope, this would have been another aggressive one right here. That would have been pretty close to stopping out to the tick, but it did move down. And then it shrank. You see, you didn't put in a lower swing right there. This is what you're looking at. I probably wouldn't have traded that. And the next one would have gone from here all the way down to here. I would have traded that. That would have been a good trade right in there. Do you see how this is going? In that one move, you had so many opportunities in there. Now, I guess, I'm doing this until Dwayne comes back, so I'm just going to go through it all with you. Okay, so you get to see the decisions that you would make. Now, if we do it bar by bar like this, instead of looking ahead, right here, you can see it pulled back to here. So now I'd be expecting to get down here. Okay, so let's just do it this way. So you'd be in that trade now. You'd be bumping your stop to break even, taking profit. Now, it went from here down. So when it goes from here down, you got to start this thing over again, right here. Okay, to wherever it goes to is what you're starting it over from. Okay, so if you go over another bar, look, it went all the way down there. So now you have to drag it all the way down here to the bottom of this. So this is your midpoint that you're looking for. Okay, and now you're looking for that pullback to the midpoint. Did it go a little bit lower? I think it did. No, it's right there. Okay, so this is not deep enough for you to want to trade right here. But because it pulled all the way back up into here, it changes the starting point. Okay, because now your starting point is down here. Okay, so if you go over some more right here, then you really don't have anything you want to trade in there. Still don't have anything you want to trade. All right, now it's pulled back. And so now I'd be looking for 100% retracement all the way up to here. And if it gets up there, it's going to flip the YBR. Okay. So there's 100% retracement right up there. It flipped the YBR. So now what I would be looking for is this. Okay, from here to here. I'd be looking for the pullback down to here right now. Okay, right and down into that area right there. Now it didn't make it into the oversold, so you don't have a trade here, so that just extends this upward. Okay, because it didn't make it into the oversold right there, so you're still working on that leg up. It's up more, so now it extends it up here like this. So now you're looking for a pullback down to this area right here. Now in the room right now, what I'd be saying is we're a long way away from the midpoint, so what we're going to want is a flat spot down here. We want a flat spot that brings us down to the midpoint. Okay. Okay, so at the bottom of this bar, we got our flat spot now. And what I'd be saying is on the next bar, if you have a big wick that goes down to the bottom and it closes up, then that's a trade you could take to pull it out of the oversold. But if it doesn't, you can look for the down close on the next bar and then an up close on the bar after that. Do you see that? Looking out a couple of bars, we look for the down close on the next bar and then an up close on the bar after that. All right. There's the down close on the next bar. And right now I'd be saying look for the up close on the bar after that. Now this, it's not an aggressive trade because it went into the oversold on this bar, right? So you gotta do the conservative trade. You gotta wait. You gotta wait for it to come out. You gotta wait for that up close. But it's gonna hit the midpoint, or it's right near the midpoint. So I would say take that trade on the up close. And there's the up close. Now I don't know what happens next, but I know that this is a trade that I would take right here. This is exactly what I'd be looking for. Okay. It goes down and it goes up. And it goes up. And so right now it'd be a break even. If you didn't stop out on that first pullback, you just stopped out right there. Okay. And now it flips the YBR. So now you got the YBR flipped around, and now you're using this point right here. Right. It's basically the same thing. This is what you got going on right now so far. Oops. I can move it over some, but let's do this. Okay. So now you're working with this. And now I gotta move it back so I can use it. Oops. Yeah, click on that. Slide it back so I can adjust it. Okay, so now this is what you got. And so you're looking for it to pull back up into here right now. Okay. So now you're in the overbought. You need a flat spot in the overbought to get to the midpoint. So that's a wick. I might have said, okay, well, that's a wick up there. You might want to take it down close on that. You should pull it out of the oversold. It didn't. So here it goes up, and that's where you hit the midpoint right there. You do actually hit the midpoint and say, okay, on this one, on the down close, you want to take that and shoot down to the prior swing low. That's what I'd be saying. And it pulls up, it goes down. That would have stopped me out, I think. If I didn't have 5 ticks in profit between here and here, and between the entry and here, it would have probably just about stopped me out right there. I'm not sure that it doesn't go down from there. It kind of does. So it might have been a stop out to the tick right in there. this right here, you're looking at this leg length from here down to here. So we'll pull back up into here. Okay. And nothing. I wouldn't do anything with this because the first one didn't go anywhere. I wouldn't have traded this and it didn't go anywhere. So I wouldn't be looking for the secondary trade. Okay. Now you're looking for another pullback, but now you're pulling back up to the midpoint right here, between here and over here. You're looking for this pullback right here. Okay, somewhere right about there.
He's
so
back.
You're at that point. Hey, Dwayne's back.
Yeah,
All right.
no,
Well, I
so
haven't taken a
no
single
rush.
trade.
No rush. Just take your time and whenever you're ready.
Okay. I haven't taken a single trade. I've just been talking through all the stuff that's happened on gold because gold had so much happen.
Silver hit a 13-year high today.
Really, a 13-year high?
Yep,
13
it's been
years,
to
so
$50. It went once back in the 80s. The Hunt brothers tried to corner the market, and that didn't end well for them. Then 13 years ago, it just ran up on the force of nature. And you know my theory about important prices, important areas always being tested. I'm hoping we've been rejected at $50 twice. I'm hoping this time we go through it and then hold the pullback at 50 and continue higher. That's what I'm looking for.
So 15 years ago, I think I bought Jake. Yeah, well, it wasn't 15 years ago. I remember buying Jake. It was on his 10th birthday. So it was 11 years ago that I did that for him. I bought him 10 ounces of silver on his 10th birthday.
Nice.
But around 15 years ago, some guy I know sold a church and bought a big bag of silver, I thought.
I've heard that story. I've heard that story. And he's approaching 2x. So the rumor goes.
Excellent. So the rumor goes. The rumor has it. All right. So right here, guys, would be a great place to aggressively short, where it went into the overbought right there at the 50%. Okay, I would aggressively short it right there. Now, I don't know what happens next. It goes up, almost to stop out, and then it goes down. Enough to get the stop to break even or take a little profit. Goes up again. Now you don't have anything to work with as far as leg lengths go, so you don't do anything else in here. Got a lower swing. You still don't have anything to work with as far as leg lengths go. You'd be looking for it to flip the YBR here. And there it goes. Now you still don't have anything to work with as far as leg lengths go because you're working with this low right here, from this low to this high right now. All right, so you really don't have anything to do here. Now it's starting to give you something you can use. So now you're working from this low to this high. This low to this high, so you're looking for a pullback right in this area right here. Okay. Didn't get it on the first one. I wouldn't have taken that. Now the pullback area is a little bit higher. It's like right here now. So right in here, if the next one gives you a down close, right, the next one gives you, I got to draw it now because right here, it's what I eyeballed was pretty close, but I got to actually draw it so we can see exactly where it is. There it is right there, right? That's pretty much where I thought I had it. But, oops, we can still use that. But, so right in there, I would have been saying, okay, I might have aggressively bought it right there. I had an order waiting. If I had an order waiting, it would have stopped me out immediately. But if I didn't have an order waiting and I was waiting for it to give us the down close, then I was going to jump on it. I probably would end up jumping on it way down here. If I just did what I usually do, where I just wait for the bar to close, I wait for the bar to close, then I click on the green. If it jumped all the way down there, where it filled me would have been wherever it stopped. So, if I clicked on it here, and it went from here all the way down to here automatically, it would fill me all the way down here.
So there's no valid reason to take it now?
I don't know. I don't know. We're only at noon right now. Still working my way to the end.
No, I mean, okay. Sorry.
In this point right here, if you're looking at the current gold price, I don't know. We can go there and see. Now, right here, you wouldn't want to trade anything yet. But right here, just flip the YBR. So you got to go from the last time it came out of the overbought, which is right here. So this is what you'd be looking at, your retracement. Okay. So if this bar closed up, you could be aggressive on the short to push back down to here, but it's not really a pretty trade. What I was saying earlier, the easy and obvious trades, this is kind of crunched up in here, the way it's coming together. It's not the easy and obvious trade yet. The easy and obvious trade would be where it closes right there at the midpoint, stop flipping the YBR and stuff like that. This is flipping the YBR. You could wait for the conservative trade on this, let this close up, and then take the down close on the next one. right here. That's what I'm talking about. So wait for the down close and back so deep. I wouldn't want to do this. You could do it from the 100% retracement, but, and this is something that I said to the guys this morning. I don't know if everybody that's in here now was there this morning, but when it does the 100% retracement, you're no longer looking at the prior swing low as the target. You're looking at the midpoint as the target. Right? The initial target would be the midpoint. That's what you expect out of it, to get to the midpoint. Think about this. Think about it this way. When it's going down like this, and it does this, and it goes down like this, and then it does the pullback. This is your 50% retracement. But it retraces all the way back up here to your 100% retracement. All right? It retraces all the way back up there to your 100% retracement. This is the beginning of an inverted head and shoulder pattern. What I would expect at that point is for it to continue that and to pull back here to the midpoint. So if you shorted it up here at the 100% retracement, I would expect it to get here, probably stop there and change directions and go up from here. That's what I'd expect, right? And that's what I'd expect in a case like this. If it went up to the 100% here, I'd expect it to go down to the midpoint to probably hold and to push it back up, right? So I just wanted to point that out. If you do have 100% retracement on a pullback, don't look for the swing low. Don't look for it to go from here all the way back down to here. No, be realistic in your expectations. Look for the midpoint. If it gets to the midpoint, good, lock in profit, show you stop close. If it goes through it right down to 100%, great. Then you lock in a lot more profit. But be realistic with your expectations. All right. Well, there, I just talked through all that stuff. And I never took a single trade, but I did talk through the whole morning session. And morning session in gold, though. Well, there was that little bit that I skipped, that half an hour between here and here. Between right here and over here. But I think you guys got the picture, right? Anyway, this is how we ended the day. Right? We ended the day right here. 65.25, 204 ticks on the NQ, 20 ticks on the Russell, 42 ticks on gold, minus 14 on the ES. Put us at $1,365 a contract. Took us 2 minutes and one trade this one to get to $1,000 total, 10 contracts. And we took a total of 29 trades. So on the month and hour, $3,977 over 4 business days, averaging $994 per contract per 2-hour business day. On the year, we're at $129,570 over 95 business days, averaging $1,363 per contract per 2-hour business day. So, following the 24/20 blueprint, if you were to quit trading when you get the pull for the day and add 1 contract per month, so far this year, you still wouldn't have worked a full 12 hours. Here I'm working 12-hour days. So far this year, 95 trading days, almost halfway through the year, you wouldn't have worked a 12-hour day yet. And you would have made $48,072 to be up for, averaging $4,017 per hour. Not bad money if you can get it.
Masood asked, if you were going to trade just one symbol, what would it be? I already answered him in the question box and said ES for me, but do you have a...
Yeah, it depends. It depends what kind of trading you want to do. It depends what size account you have. It depends how much risk you want to have. All that. You know, Masood, if you're doing the micros, and you know, you got to look at a bunch of different things. You know, if you're doing the micros, okay. If you're doing the micros, the ES is $1.25 a tick, and it's really liquid.
But you can put on 3 because yesterday I was thinking, I wish there was like, instead of one full E-mini, I wish for new people there was like a half an E-mini instead of a 10th.
Yeah,
right?
There is.
There is, yeah. You just trade 5 micros.
Right, exactly. And trading 5 micros, the commission is still less than, it's about half of what we used to pay.
I know.
Right?
I know. That's so sweet.
So you can still do it and make money.
What did we used to pay? $8.25 a round turn on one E-mini?
That was $5.80 for the ES. It was the crude oil that was the most expensive. Crude oil was the crude oil was like $7, just about.
Now the micros are down at like I think $1.25.
Or less.
That's each side though, so it's like $2.50 round turn.
No, that's all in.
It's $1.25 round turn. Okay, all right.
Yeah, that's all in. Yeah, no. If it were $2.50, then you have to have 2 ticks to make up a single trade.
Yeah.
They're trying to get away from you having to have multiple ticks to cover the commission costs, I think.
Nice.
But what symbol was more consistent result? Well, you can look at the spreadsheet. You have access to the spreadsheet, right, Masood? Look at the spreadsheet. Gold right now is where I'm making the most money. The ES, well, this month right now, the ES is where I got the most money right now. But up until today, I thought gold was, or yesterday. I think, yeah, yesterday. Gold was the most. But last month, gold was the most. I think gold and the ES were neck and neck last month. I'm sorry, this is the NQ. The NQ. Gold was the most last month by double. And gold this month is at 900, but the NQ and the ES are neck and neck.
This morning in the discussion group, I posted a chart of silver, and I talked about the 13-year high and all that, and the Hunt brothers. I did, but then I said I believe silver's about to retrace back to the 30-minute BBC, and the last time I looked, that's exactly where it was. So I don't know if you want to look at it real quick. It's SIN 25.
Hang on a second. Let me finish answering Masood here.
Okay.
I'm just going through here. You can go through and look at these totals here, Masood, and see where the most consistent gains are, right, from month to month. Like gold, the ES, and the NQ are the ones that I have the most consistent gains on. The NQ, when I have good months on the NQ, it dwarfs the other ones, right? But the NQ is the one that I can go for like a week or even 2 weeks almost right there without trading because it's just too volatile and it's not liquid enough. Whereas the ES is always liquid enough, right? And the gold is usually pretty liquid. So the ES is probably usually going to be pretty consistent for you, and it's always going to be liquid. Okay. And the link for the sheet, yeah, I'll share it right now. Copy link, done. Here, I'll stick it here, and I'll stick it in the other room too, in the other chat box. Okay, there's one, and here's another one. Okay, you all have read access to this if you want to go and look at it. Okay. All right, Dwayne, silver, SIN, you said?
Mm-hmm.
Let's go out to the sixth one out here. I have NVIDIA on that. What's NVIDIA doing? Huh. SIN. Is that even NVIDIA? SIN. I don't think that was NVIDIA.
You probably need
Futures.
to go to future. There it goes, silver futures.
Here's silver futures, comics.
Now, silver is probably not good for a beginning trader for a number of reasons, but I don't know if you had the BBC on there.
Oh, well, put it on.
I forget the exact price I called, but that's where the BBC
Here's the
was at
BBC
time.
right here.
Okay.
The leading edge is the
So
BBC.
we overshot it just a little bit.
Yep, we got a wick down here to the bottom to the VB3. And
Now
now
it wants to run again.
If it's going to do what it should do, technically, if it's going to do what it should do this right now. That's what it should do from here. So that would put us up at $37, $38 silver.
And what's
over the
going to
next however
happen
long
with
this is.
with this run in silver is people are going to come out of the woodwork because everybody always wants to trade whatever the hot thing is right now. So we'll see.
Yes. That's what it looks like, though. That does look really bullish right there where it is. That looks really bullish for silver. All right. So that is it. With that, we could pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park.
And I am ready. Okie doke. Recap of the morning session.
Today it took 2 minutes and one trade to get to $1,000 with 10 contracts.
Great job.
Thank you very much.
Okie doke. All right, guys, over here is the regular schedule for the afternoon broadcast. Now, to anyone that doesn't know, Michael's going to be out Friday and Monday. I'll be in the room in the morning shooting a breeze with the guys. We'll be looking at charts. I don't know that I can do it on Monday. I will if I can. And the weekly trading zones will come out on time Monday morning. CTAs come out Sunday night, God willing, as everything normally does. And I will try to get in Monday morning if I can. But I'll make sure the charts are up and running, and I'll pop in hopefully at some point. But the only thing is my charts. Well, we don't need to get into the weeds on that. So Michael's finished. So now we're going to pick up where we normally start the broadcast each and every day with our daily devotional. But first, let me say this. There's two different ways to join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll automatically have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, maybe this time of year on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. So you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our little corner of the world, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips. And it kind of lets you know we've been around a minute, or 2, or 3. youtube.com/CFRN. So now we'll dive into our daily devotional. The topic we're on right now, this is day 3 of 6. More than money. Our scripture is Hebrews 11, verse 4, and I'm sharing it from the Message translation. By an act of faith, Abel brought a better sacrifice to God than Cain. It was what he believed, not what he brought, that made the difference. That's what God noticed and approved as righteous. After all these centuries, that belief continues to catch our notice. Again, Hebrews 11, verse 4. Managing God's resources. You might see yourself as the owner of your possessions, but God sees us as stewards or managers of His resources. It's kind of like managing a company for someone else. God wants us to be faithful stewards, managing what He entrusts to us with integrity. One way we demonstrate this is through tithing, which is returning the first 10% of the income God provided back to Him. It's a way to acknowledge His ownership and trust Him to provide for our needs. Returning the first 10% takes faith. And that's what God is after. He's not after your money. He's after your heart, your faith. The tithe is neither an act of giving nor an act of generosity, because God has set apart the first 10% to be returned to Him. It's a sacred demonstration of returning the first and best of what God has provided back to Him. God values both our financial offerings and our integrity in managing what He has entrusted to us. His desire is for us to be faithful in both aspects, not just in tithing, but also in wisely managing the resources He's provided. This includes being honest and diligent in our saving and our spending, reflecting God's character of integrity. We'll dive deeper into this tomorrow. Let's pray. Heavenly Father, we're realizing more and more each day that it matters how we manage what you've given us. We realize that tithing is a spiritual act of faith and gratitude rather than a financial act. You're the only one who deserves first place in our heart. Help us to demonstrate our love for you in the way we handle our finances. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 15 points. NASDAQ is down 12. S&P 500 down 6. But the Russell 2000, our man in the street, is actually up 11. Things are pretty quiet, and I think it has in part to do with the high impact news we have coming out tomorrow morning. In the commodity basket, crude oil is up 61 cents, trading 63.46 last. That's a gain of just shy of 1%, or $610 per contract traded. Gold is down $28.20. We expected the retracement. Trading 33.7210 last. That's a drop of almost 1%. Silver up $1.08, trading 35.73 last. That's a gain of over 3%. And that's after the pullback, which I'll show you on the charts in a moment. Now, in the Asian markets at the close, the Nikkei dropped 192 points. Shanghai rose 7. The Hang Seng gained 252. And for the Hang Seng, that's a little over 1%. In the European markets at the close, FTSE up 9. The DAX up 47. The CAC down 14. So that gave us a mixed day in Asia. It was a mixed day for the UK. And at the moment, it is a mixed radio Thursday here in the US of A. We got 3 of the major indices in the red. The Russell is the only one in the green, only by 11 points. Now, sometimes the Russell can lead those other 3, but it's not something you can count on or plan your trades around. When it happens, it happens. So, but as you know, as futures traders, we like to see the 4 major indices all the same color. We don't care if they're all red or all green. When they're all the same color, you get better follow through on your trades. But when they're mixed, let's say you're shooting for 2 points on the ES. That sucker will get up to 6 ticks and stops. You want 8 ticks, but just somehow can't quite get there. So take what the market offers and then nail the next opportunity. There's no shame in it taking 4 or 5 trades to get your goal for the day. In fact, you can take 10 trades to get your goal for the day and still be net positive after commissions. Let's go to the news. New travel ban. President Donald Trump signed a travel ban yesterday. preventing nationals from 12 countries from entering the U.S. and partially restricting entry from 7 others. The order, which cites national security risk, is scheduled to go into effect 12:01 a.m. Eastern this coming Monday morning. The ban follows a January 20th executive order requiring the Department of Homeland Security and other agencies to assess national security risks and hostile attitudes toward the U.S. from foreign countries. The White House says countries targeted by yesterday's ban have high visa overstay rates or fail to properly vet or share threat information on their citizens entering the U.S. Countries whose foreign nationals will be banned are Afghanistan, Myanmar or Burma, Chad, Republic of the Congo, Equatorial Guinea, Eritrea, I never heard of, Haiti, Iran, Libya, Somalia, Sudan, and Yemen. Countries with partial restrictions include Burundi, Cuba, Laos, Sierra Leone, Togo, Turkmenistan, and Venezuela. So, there you go. Now, untangling the spider web. Ukraine released drone footage yesterday of this week's sweeping attack on Russia's bomber fleet. The attack on Sunday is by far Ukraine's most complex operation in the 3-year war. Can you believe this thing's been going on for 3 years? Time flies. Ukraine says Operation Spiderweb took 18 months to plan. The attack involves smuggling 117 remotely operated drones into Russia on the roofs of mobile log cabins, with pilots launching them near simultaneously to military airfields across multiple time zones. One of the 4 airfields targeted, and the farthest, is roughly 3,000 miles from Kiev. Ukraine says it damaged 41 bomber planes, destroying about half of them permanently. Satellite imagery has so far confirmed the destruction of at least 12 strategic bombers. Ukraine estimates the cost to Russia at more than $7 billion. President Trump says Russian President Putin plans to respond to the attack, forestalling a potential ceasefire. And y'all know I'm not a sports guy, but tonight is tip-off night for the NBA Finals. The Oklahoma City Thunder hosts the Indiana Pacers for Game 1 of the NBA Finals. That'll be on ABC at 8:30 p.m. Eastern. So now let's go to Wall Street. A call between President Trump and Chinese President Xi took place today and appears to have restarted previously stalled trade talks between the two nations. Our respective teams will be meeting shortly at a location to be determined, Trump announced on Truth Social, after what he described as a very good phone call that lasted 1.5 hours. The conversation was focused almost entirely on trade. Nothing was discussed concerning Russia, Ukraine, or Iran. Trump added that both leaders invited and accepted invitations from the other for a presidential level visit, but no clarity on who might go first. Well, my guess is Trump's going to have to go there because the international courts have an arrest warrant out on Putin. So he really can't leave his country. Chinese state media also confirmed the call as well as some details, most notably the apparent restarting of trade talks. I think that's good news. From Bloomberg, Wall Street is cranking up the bond machine as U.S., now that's bond, B-O-N-D, not bomb, the bond machine, as U.S. homeowners finding that buying a new house, thanks to too late Powell, is out of reach since mortgage rates started climbing in 2022 and are instead getting home equity loans and sprucing up their current properties. I'm going to say just one thing here, guys. If you choose to get a home equity loan, make sure it's a fixed rate. I know somebody who took a home equity loan a lot of years ago. He did not read the fine print, and that's why he is really hoping that Powell will lower rates. It took a $1,200 mortgage to almost $1,600. So, read the fine print before you sign on the line. From Reuters, the U.S. trade deficit narrowed sharply in April, with imports decreasing by the most on record as the front-running of goods ahead of tariffs ebbed, which would provide a lift to economic growth this quarter. Now, let me just say this. The Washington Post had an article yesterday. The Great Mystery. Fentanyl in America seems to be vanishing. Oh, my, that could have nothing to do with the fact that we closed the border. If they don't rewrite that article, they should have their journalism license yanked, if there is such a thing. Mysterious. Why is it mysterious? That's what Trump campaigned on. We've lost so many Americans to that deadly drug. Far more than were lost in the Vietnam War. The trade gap contracted by a record 55.5% to $61.6 billion, the lowest level since September of 2023. But they say what Trump's doing is not working. Go figure. Freight data platform Sonar, S-O-N-A-R, released some new product updates this week geared at helping users take a more specific look at data comparisons in one easy location. Lane level rate data can now be overlaid onto all charts, giving users a granular view wherever they are working. Chart titles have been updated to display the corresponding view symbol information for ease of understanding. The Trade War Command Center is adding more insights with a direct integration of all trade war coverage from FreightWaves. Sonar users can access the latest trade and tariff news directly from the Command Center just by clicking the image at the bottom. And last but not least, silver has soared to the key milestone of $35 per ounce, reaching its highest level in more than 13 years, propelled by robust industrial demand and ongoing supply deficits. Keep in mind, most of the gold that's ever been mined is still in existence. It might be in a gold bar, or a coin, a pair of earrings, or a bracelet, but it's still here, most of it. Silver, on the other hand, has industrial applications. So while you might have some silver earrings or a silver necklace, a lot of the silver that's been mined, a vast majority of the silver that's been mined, it's gone. Spot silver rose 2.5% to $35.82 per ounce as of 1347 Greenwich Mean Time, having touched its highest level since February 2012 at $36.08. So there you have it. That's the news. Now let's go to the local news. Remember when you were a kid, they had like 30 minutes of local news and then 30 minutes of national news with Walter Cronkite or Dan Rathers. And I remember as a kid sitting on the couch with my grandfather. And when the national news came on, he would start cussing and shaking his fist, and I didn't understand it. My wife says I'm now a carbon copy of him. Except now we have a 24-hour news cycle. It never stops. Um, and rarely do you, I mean, if I watch Laura, who I like, I know they call her the Queen of Hate. Sorry. And then I watch Jesse. Most times they're covering the same stories. So I'm starting to just choose to watch one or the other and like alternate different days. But I like both of their personalities, so anyway. Okay, Logic 247, that's our 24/7 around the clock E-mini alert service. Not just E-minis, also crude, gold, and silver. We're in week 357. Over the last 357 weeks, we've issued over 19,800 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 7:30 a.m. Eastern. She'll update it this afternoon as she does each day. But at the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 64 logic alerts. We're still waiting on the outcome of 18, so that gives us 46 actionable alerts, of which 3 or 7% would have been stopped out, again based on market structure and that simple process we teach all passport holders. Now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then typically additional targets and a final trade to target. Yes, you can trade them, but please hear me. The true purpose of the logic alerts is to help you learn how to read a chart. If you want to be a doctor, you got to be able to read the medical journals, the medical textbooks. You want to be an attorney, you got to be able to read those textbooks and the law review journals, okay? But if you choose to be a trader, you got to learn how to read the charts, and that's a completely different language. There's no words, no sentences, no paragraphs, no punctuation. And if you use the Logic 247 alerts as they're intended, soon you too will be reading the charts like you've been doing it. You'll become fluent. You know how some people speak Spanish, but some people speak it fluently? If you show up and do the work, you'll be speaking the language of the charts fluently. And I'll help you if you become a passport holder. Now, 357 weeks is a long time, but long before we had Logic 247, and I mean years before, we had what we call the concierge trade alerts. And they're different. Different how? Let me show you. The CTAs do not come out around the clock. They are posted as a static report shortly before the Globex open each evening. I do have some appointments this afternoon, so if I know I'm not going to be able to get them out before the open, I will put a message in the discussion group in Telegram. So the Thursday session that we're in right now, it began last night at 6 p.m. Eastern. 5 minutes before the markets opened last night, all of our members and all of our trial members had all of these targets. ES, the Dow, the Russell, crude oil, the NQ, gold, and even silver. As we go through the charts, you're going to see these targets drawn with a horizontal line. Just remember, Members and trial members had them 5 minutes before the market opened. And so with that, we can now actually go to the charts. My favorite part of the broadcast. Here's the ES. Now, we've been talking about this high for quite a while. 6,008. Well, guess what? Today we took it out. We hit 6,016.50. But look what's happened. Now we're pulling back into potential support. The step line and blue and climbing. But if the market continues lower and gets below blue and climbing, then you've got potential support here and then at the daily BBC. If we take out today's high, when we take out today's high, your next resistance is going to be at this double top right here, roughly 60.57, and then above that at the previous bearish cross around 61.20. Okay, now why do I show you a daily chart every day? It's simple. Institutional traders, the ones with the deep pockets that actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I challenge you to spend, whether you trade futures, stocks, crypto, Forex, ETFs, it doesn't matter. I challenge you to spend 2 minutes with the daily chart of whatever you're about to trade before you drop to the smaller time frame and actually start trading. Number one, it gives you a free look over the shoulder of the deep pockets that move price. So obviously they were buying this morning and then they stopped. Okay. Now, looking at your smaller time frame, you have no idea that we have this major support times 2 right at today's low. Nor on your smaller time frame do you know that we actually took out that important high. Nor do you know where the next major resistance is. If you'll spend 2 minutes with the daily chart before you start trading on your smaller time frame, if you do it for 30 days, well, there's 20 trading days in a month. If you do it for a month, I don't think you'll ever go back. Now, to me, it's incredibly enlightening. And again, the more time you spend with the charts, as you learn the language, then it will speak volumes to you. Okay? Now, the logic alerts and the concierge trade alerts, they're all done on a 30-minute chart. There's nothing magic about 30 minutes. It is the time frame I chose years ago. And they say if it ain't broke, leave it alone. So I have. The vertical lines separate today, Thursday, from Wednesday. Back here's Tuesday. Now you might be wondering, what's that arrow about? Last Thursday, we had a bearish cross. And so the day I drew this and posted it, I said, be prepared for price to run into resistance here. And it did. And all of yesterday, we were barely able to break. We couldn't really break above that and stay, but look at this. These are the weekly trading zones. They're published Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And we're approaching 15 and a half years that we've published the zones. It's since December 14th of 2009. So I guess it'll be June 9th when we hit 15 years and a half. Or will it be July 9th? Oh, it doesn't matter. Now, when price drops to a weekly trading zone, we expect support. So now over here's today, Thursday, but look at yesterday. Now Tuesday we tried to break down below. We couldn't do it. Yesterday, look at all the times we came down to the zone. These zones were published Monday morning at 6:15 a.m. Eastern. Here they are on Wednesday, still doing their job. And then today, last night the market opened. This was the opening candle, and we were right at a zone. Now when price encounters a weekly trading zone, only one of three things happens. 70% of the time it's consolidation. 20% of the time it's rejection. Like that, like that, like that, like that. 10% of the time, the slice. Okay? That's when a 30-minute candle slices through a zone like it's not even there. When that happens, like right here, what typically happens is when that slice runs out of steam, it will retrace to the zone it sliced through and continue in the direction of the slice. So we consolidated until the London Open and we got a little boost. Now this candle opened at 59, we'll call it 75, and ran up to let's hang on. Come on now. All right. Opened at 74 and ran up to 91. You do it in your head. Yeah, you do the math. But you only need 2 points to get your goal for the day. Now we ran into some resistance right here. See that? It's called market structure. That high right there is that high right there. Resistance will always send the market looking for support. Now the green line is called the BVC. It stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices. Let me go back to the daily chart for a second. This is what's real interesting. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. But as you can see on this chart, the pullback held, the pullback held, the pullback held, the pullback held, until it didn't. We know eventually it will trade through. See right here where we traded through the BBC led to all this. Then when we traded through the BBC in the other direction on April 24th, it led to all this. Pretty cool, right? Now, same thing applies to the 30-minute chart. Larger the time frame, the more accurate it's going to be. So that's why there were so many perfect touches on the daily. The market's a little confused today. It wants to run up, then it wants to run down, then it wants to run up, then it wants to run down. I wouldn't be surprised if we end up with a doji on the day, on the daily chart. So we hit resistance, pull back to the BBC, the pullback held, and then this was the 8:30 when the news came out. We ran up, and we ran down. And then this is the 9:30 Wall Street candle. Man, what a drop. Now, I want you to look at the low of this candle, the 9:30 opening candle this morning. You see the low? Now I want you to look left at the horizontal line on my cursor. I drew this window in days ago. I planned my work ahead of time. And we filled completely that window to the tick. And then price ran back up. Hit the long target, came back down. Still haven't hit the short target, but So many opportunities. Just this one little candle right here. It opened at 59.91 and ran up to 95 and change. So 4 points in that one candle. Only need 2 points to get your goal for the day. On the Dow. This is where we opened last night. Now remember, all members and trial members had these targets 5 minutes before the market opened. We just consolidated along this zone till the London Open, and then we ran all the way up to the long target. Resistance sends us looking for support. Pullback held. Then the 8:30 news, and we don't promote trading the news because of this. Okay, but where did the market find support when it dropped? At the zone. Where to find resistance? Basically at the zone, like it did yesterday. So then we come down and we trade through the short target. And this low right here, you see right here where this black step line pinched up and then it opened back up. Okay, it's not really a spot I would have called for support, but it's close. I would have thought more like right here. So, I mean, nothing's for sure in the markets. Nobody knows what's going to happen next. Okay? So, you do your best work, you accept the results, and you look for the next opportunity. So, we ran back up all the way to the long target, but we failed to put in a higher high. We come back down to the zone and the short target support. We've now bounced back up to the BBC. Question is, will the pullback hold and give us another downside leg, or will we continue higher? If we try to continue higher, you see that black step line right up right above price? That's potential resistance. Okay? Keep that in mind. Then you got the target here, and of course here. And I don't foresee it happening again here. Now, if the news is positive tomorrow, this high impact news we have coming out tomorrow, then we could definitely take that out if it's good. If it's not so good, then we could take out this low. So, tomorrow morning, do not, this is just my best advice to you. Don't trade the economic reports. This is not your father's market. There was a time when good news always sent the market higher, and bad news always sent the market lower. I mean, those were the easy days, like shooting fish in a barrel. But today, with so many market participants and algorithms and AI and whatnot, trading econ reports is, in my opinion, financial suicide. Now, there are people out there who do trade the news, and they're very good at it. Michael and I happen to know someone. He was a guest on our show several times. He's got a seat on the exchange. On an average day, he trades 100,000 E-mini contracts. Not all at once, but he trades all day. So, I know that if you Google CFRN Michael X interview, it'll still pop up, I believe. I mean, it's been a lot of years. And you can actually listen. And this guy, he wasn't like some chest pounder, you know. We had to literally and he wasn't used to being interviewed. But he agreed through a mutual friend to the interview. And his results are vetted. We know that they're true. But I think it was during the second interview, maybe. I asked him a question. I said, Michael, and we didn't reveal his last name, so we just called him Michael X. I said, what do you consider to be a good day in the markets? And he specifically trades the ES. I thought he was going to give me some number like, you know, $250,000, $500,000, $1 million, because of how much size he trades in. But he left me speechless when I asked the question. He said, any day I can net 2 points out of the ES is a huge day for me. Whoa. See, that's the power of multiple contracts. So, okay, here's the open on the Russell last night. We came down, we found support at yesterday's low. Support sends us looking for resistance. Almost got to the target. Missed it by just a little bit. Then we pulled back, and then we had that news, and then we had the Wall Street open. And, during that news cycle, I want you to notice that this window I drew in a couple days ago, it filled. And then after we went back up and hit the long target again, this was during the Wall Street open, it filled again. We bounced off the zone, and then it filled again. 1, 2, 3, 4 times. You can plan your work ahead once you learn to read the chart. So support sends us to resistance, but we fail to take out today's high or yesterday's high. That's bearish. Sent us down to pull back, held. Now look where we're sitting, just above the long target. Is there room to get 2 points from here? Let's see, 21.11 to 21.13. Yeah. I don't necessarily know it's a trade I would take, but it's certainly a valid window of opportunity. Now, you got to make sure price, see the high of this candle is 21.10 half. Got to make sure, so see it's kind of a tight. 21.11, that's only a half a point above that, so that's why I'm saying maybe this isn't one I would take. But if you're trading the Russell and if you have an interest, well, see what happens. Okay, NQ, here's where we opened last night, waddling sideways, almost touched the short target. Then London open, bang, we hit the long target. And when the move ran out of steam, we retraced to the BBC, the pullback held. Then there was that 8:30 news, markets go wild. Here's the 9:30 Wall Street open. We came all the way down to the short target. The next 30-minute candle, we ran all the way up to the long target. Next candle, we ran all the way down to the short target. And then we put in some higher highs, looking pretty bullish. Now, not so much. All the way back to the short target, and now we're working our way back to the long target. Now, something I may not have mentioned in a while. Every trade in the Logic 247 channel, those are all trend trades based on the 30-minute chart and the BBC. If price is above the BBC on the 30-minute chart, I only issue long alerts. If price is below the 30-minute BBC, I only issue short alerts. So when I say there's over 19,800 individual handcrafted alerts in the channel, if I had been doing trend and counter trend, there might be twice that many. But I don't think our percentage would be as good as it is. Okay, so down we come. Now we're pulling back up to the BBC and the long target. They're right there together. So price could stall there, and we could see another move back down to the short target. And should that happen, let's say price goes up here, hits the long target, or even spikes it, but ultimately it finds resistance and comes back down. You know what to do. I would sell roughly 21,753. Let's make it 21,750. 750 down to 730. That's 20 points at $20 a point. That's $400 per contract traded, right there. Now that's if we find resistance and we start printing a red candle. Okay. Crude oil. This is where we opened last night. Consolidated at the zone for quite a few hours. Here comes London. We almost hit the long target. We ran into, you see this bearish cross right here? Okay. That's what I was basing it on. I could have been a little more conservative, and if I had, that would have been that high right there. Okay, bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Opposite is true of a bullish cross. The bearish cross is when the red line gets below the green line. The bullish cross is when the blue line gets above the green line. Okay, all right. Does it happen 100% of the time? No. Very few things in trading happen 100% of the time. Does it happen more often than not? Yeah. Now, we've dropped to the BBC, but we have red and falling overhead. So remember I said that the pullback holds more often than it doesn't? Held here, held here, held here. But notice that on these pullbacks, blue and climbing stayed blue. Now that it's turned red, I have a sneaking suspicion we just might trade below the BBC. And the only spot I would be comfortable with as far as a window, there's not enough room. There just isn't enough room. Because you see the zone is 62.65. So getting in at 75, that would be putting you in right at a bullish cross, and that's a place where you expect to find support. So I'm going to say find something else to trade. Gold. Here's where we opened last night. Ran up to the long target. Resistance. Now look at the high of this candle right here. It barely took out that high, but it failed to take out that high. So you should expect lower prices. Down we come to the short target. Support at the bullish cross. Isn't that beautiful? Support sends the market looking for resistance. If you look left far enough, you'll figure out why. Then price gets below blue and climbing, turning it to red and falling. And this time we trade through the BBC. Back down to the short target again. And all the way down to the zone that was support yesterday and the day before. Up there is the highest weekly trading zone for the week. Now notice on the way down, you see how the black step line and red and falling were running parallel. But what's happening right here is the step line is trying to cross to get on the right side of red and falling. If that happens, you should expect a retracement back to the BBC. Now, will the pullback hold? I have no way of knowing. But I can caution you with this. If price on the pullback, if price does trade through the BBC, you got a bearish cross right there. Okay. So don't let that catch you flat-footed. We'll call it 33.98. So you don't have a lot of room to work with there, but you only need a $1 move in gold to get your goal for the day. And last but not least, silver. Look at that. A $1 move in silver is worth $5,000 per contract traded. So from 34.63, we put in a high at 36.27. Here, I don't have my calculator. Oh wait, I can do this. Hey Siri, what's 36.27 minus 34.63?
3,627 minus 3,463 is 164.
Okay, so that's $1.64. Hey Siri, what's $1.64 divided by 2? Hey Siri, what's $1.64 divided by 2? Okay, it's 82 cents. Now it only takes 2 pennies to get your goal for the day. Now this morning in the discussion group, we put in these highs and I saw the step line cross. So if you go look in the discussion group in Telegram, the members only or the trial, you'll see my comment that price is pulling back to the BVC, should pull back to the BVC. And then I later posted a chart of it doing exactly that. So the pullback held, but now we're bouncing up into potential resistance at red and falling. If price can overcome red and falling, remember you only need 2 pennies to get your goal for the day. Now let's say red and falling drives price back down. Once you get below these lows, now I don't expect 100% retracement. But boy, you got a real nice area to work with there. Okay? But make sure you take out these lows. And again, silver's not really the best market. It's got high margins. It can do weird things. So start with something simple like the ES, crude, or gold, because those have plenty of volatility and volume around the clock. So if you work a day job, you can trade those 3 markets when you come home from work, whatever. Now, when the markets first open at 6 p.m. Eastern each night, it's typically a little bit quiet, except in earnings season. When the big names report or Trump makes a post, the markets can jump. But usually the first couple hours are fairly quiet. And as you saw on most of those charts, the market was quiet for quite a few hours last night. In fact, most of the markets didn't wake up and start moving until the London Open. That's a little unusual. But again, I think all eyes are on these jobs numbers that are coming out tomorrow morning. So please be flat. All right. So the dust settles, then make hay while the sun shines. All right. If you want to become a member, go to mytradingiq.com. Watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Tell us, hey, I want to become a member. Valerie will send you an email chock full of information about all the benefits of becoming a passport holder. She'll even provide you a link to click so you can seal the deal. Number one, you're going to get 2 hours of live training every trading day in an interactive environment, real trades, live markets, with an explanation of every trade taken and the results, good, bad, or ugly. We don't sweep anything under the carpet. Okay? 9 out of 10 new traders fail because they don't have a teacher. Now, Futures Magazine in 2006 gave us this information. Brokers have told me that it's worse than that now. What Futures Magazine didn't answer was the why. And because I was one of the 9 out of 10, I embarked on a journey to find out why. And I quickly found out. You couldn't find a teacher. I even posted a bounty on the internet, especially where a lot of these big shots were bragging about how much money they were making. I offered a substantial sum of money for someone to allow me to come to wherever they were in the world. I would sharpen their pencils. I would make the coffee just for the privilege of looking over their shoulder. Plus, I was paying them. You know how many people accepted my offer? Not one. Right there, we identified a need in the markets, and we filled that hole. 2 hours of live training every day, plus private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Why? Because that's how markets work. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. On Monday morning, you'll get the new weekly trading zones at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. On Thursday nights, you'll be able to attend the members-only workshop at 8 p.m. Eastern. Michael's heading out of town. We're not going to do a workshop tonight. So everybody, all members, you got the night off. Tomorrow morning, I will be in the live training room, but it's going to be a very different environment than a normal day, okay? Because Michael has taught you guys some specific things. I'm still kind of old school with my larger time frame charts, but I have begun to learn what's being taught in the live training room these days. So I'll be in there tomorrow morning just kind of shooting the breeze. We'll be watching the charts. We'll be talking about what's happening. And if one of you guys wants to share your screen, just tell me and I'll let you. Okay? Well, let me think that through, but you can ask in the morning. All right? Now, one last thing. When you become a passport holder, you get the golden key that unlocks all the private channels in Telegram. We have public channels, we have private channels, but once you become a passport holder, you have access to everything. Everything a trader needs, all under one roof. One low price. It's a good deal. I checked. Okay, let's wrap it up with our good word for today. Your life is a letter. Part 1. 2 Corinthians 3:3. You show that you are a letter from Christ. Paul wrote to the Corinthian believers, you yourselves are our letter, written on our hearts, known and read by everyone. You show that you are a letter from Christ, the result of our ministry, written not with ink, but with the Spirit of the living God on tablets of human hearts. 2 Corinthians chapter 3, verses 2 through 3. Usually, when we get letters in the mail, we sort it into two piles: important letters and junk mail. How do we make that determination? By answering these two questions. Number one, who's the letter from? The source determines your interest level. And you are a letter to the world from Christ and about Christ. For what we preach is not ourselves, but Jesus Christ as Lord. 2 Corinthians 4:5. Religious people often promote their denomination, but we're called to promote Christ and Him alone. Are people really interested? Yes. Jesus promised, "And I, when I am lifted up, will draw all people to myself." John 12:32. Nothing is more needed today than a living portrait of Jesus reflected in the lives of His redeemed people. So deliver your letter with love to whoever crosses your path. The only Jesus some people will ever see is the Jesus they see in you. Think about that. Okay, now, in comes the mail. We sort it into two piles. One's important, the other's junk. First, who's the letter from? Now, number two, who's the letter addressed to? The Bible answers that question. That whoever believes in Him should not perish, but have everlasting life. John 3:16. Dr. David Cho built the world's largest church in Seoul, South Korea. Almost 1 million people. Man. That's bigger than many towns and cities in America. But as a young Buddhist, he was led to Christ by a lady he only met once. What if she had decided to remain silent? Your life is a letter from Christ with the potential to change someone else's life. So make sure you deliver it. Not like the postman on Seinfeld. Remember? He figured, why deliver the mail? His apartment was filled with months, years of mail that he just never delivered. He just collected his check. Was his name Norman? Maybe it was. Anyway, I'm sure you know who I'm talking about. That was quite an episode. I'm thinking of starting with Seinfeld 1, Season 1, Episode 1. It struck me yesterday. Something popped into my head about a funny Seinfeld episode. I think in my spare time, I'll watch 5 minutes here, 5 minutes there when I'm in between other tasks. I think I told you, I'm getting YouTube TV. Man, what a deal. They don't sponsor this show, but they sure have helped us out with their YouTube channel. $88 a month. You get the first 20 days free, and then the first 2 months after that are at a discounted rate. But for $88 a month, you get 6 individual accounts for your household. That means you can have your account, your wife can have her account, my grandson, godson, he can have his account, my daughter can have her account, and you can stream on up to 4 screens at the same time from each account. You have unlimited cloud storage. You know how you like to record Law and Order every week, but you're not always there to see it live in real time. Plus, you don't want to watch the commercials, right? So you do the DVR. Well, Dish Network was charging me $159 a month, and that was not for some premium package. It was, well, let's just say we never watched 95% of the channels in that package. With YouTube TV, we get all the channels we like. And I used to have a TV in my office, and I always had CNBC running in the background with the volume turned down. It just felt like I wasn't working alone. And then that TV broke. I never replaced it. But now on my other monitor over here, I'll be able, via YouTube TV, to have my coworkers, the crew over at CNBC. I tried Fox Business for a while, and I don't know. I'm not a big NBC fan, although a lot of the shows we watch, like Law and Order, I think that's on NBC. So CNBC is just NBC's version of the financial markets, so I guess I like their personalities better. But the good news is I can choose, because with YouTube TV, I can watch either one. It's a great deal. So, YouTube, if you're listening, we'd love to have you advertise your services on our show. Okay. I gotta go. I'm sure you do too. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.